Hello and welcome. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra as well as Sonia Shenoy. Is always looking good for the markets. No problems whatsoever. We started well. A brief resistance upwards of 17,740, but we're holding around that 17,700 mark for the Nifty. The Nifty Bank outperforming just the way it did in yesterday's last hour of trade. The broader markets also no complaints whatsoever. Sonia, Ekta, three stocks advancing for one declining.
Absolutely, and it's turning out to be a really good day, especially for mid caps, right? So as you said, no complaints at all, and so many companies are sitting at fresh 52-week highs. So whether it's Federal Bank, Karur Vysya Bank, largely from the banking space, you have Bank of Baroda, all at fresh 52-week highs, and then many of these capital goods names like ABB India, etc., are also looking pretty good. But let's get straight down to talk about individual stocks. Then TCI Express is the stock on our radar. The company has given a very good outlook post its first quarter numbers. Management said that they are on track to maintain an 18 to 20% revenue growth. Chander Agarwal, the managing director at TCI Express, joins on the show to talk about that. Chander, thanks a lot for joining in. I want to start by asking you about the incremental demand that you're seeing, because the last time you did mention to us that you have a growth target of 18 to 20%, and on the margin front you're looking at about 17-18%. But just give us some qualitative analysis on how demand is shaping up and what will lead to that 18 to 20% growth.
Right. So thank you for having me. And, the interesting thing is that all our verticals have started showing good traction. And that saying, we're in the auto components, we are in the textiles and the engineering, and pretty much all the high value products which are manufactured in India, we're seeing a good traction happening. So I think the demand is quite strong, and that would be the face for higher volume growth as well as a revenue growth, and in turn profitability.
Okay. Mr. Agarwal, you have around 104 crores of cash on books. I'm more interested in terms of knowing what the plans would be possibly to deploy it in FY23.
So we're right on track to start our second automation project. And we recently purchased the land in Chennai and Calcutta. So the construction of this would entail a part of the capex plans that we have, as well as the automation part. So I think in general we would end up spending about not maybe 100 crore, but almost 80 crores, up to 80 crores is what I foresee. And we also have we know that we have a strong fundamental business and we have a strong outlook for the future as well. So we are possibly the only logistics company in India that is doing a buyback. So that is in progress, and that is happening. So I see that also being one of a good success factors coming in.
I see you adding a lot of branches as well. You've added 10 new branches in the first quarter. You're targeting 15 new branches for business, in this entire year. What I wanted to know is your utilization. The first quarter was close to around 85% odd. Where does it stand right now? And secondly, all the other value-added businesses that you've started, be it cold chain, e-commerce, rail express, you were targeting that to be about 25% of your revenues. Where do they stand at right now?
It's about almost 12 to 15%. And the new verticals are showing good traction. I do not see any sort of problem emerging in terms of the volume that's coming up. The acceptability is very high because again it's a very niche product. It's not like run of the mill where we have 100 competitors and all of that. So I think this is as we have planned. It'll continue to be in the same manner. I do not see any deviation from that.
You said that you have, auto clients as well, and you're seeing good growth over there. You have clients like Hero, Maruti, etc. in your books. What is the kind of opportunity in the auto space? Just trying to understand how much does it feature as a part of your overall revenue stream, and how much can it grow to?
So we usually what we move are the auto components. So regardless of how many cars sell or don't sell, we are part of the supply chain which is behind the auto manufacturing. And that is about almost not more than, I would say about 8 to 9% of the business. So we're not highly leveraged, and hence we've been able to have good growth even when the auto had slowed down. So that clearly shows that, it's a right vertical to be in, and we continue to service our clients over there.
You didn't tell us about the utilization that you were at.
Oh, yeah.
Yeah.
So that is about almost, I would imagine that at this point it would be at 87%, a little higher. And of course, because the volumes have also grown. And by this quarter end, it could be a little bit more than 86, about 87%.
Okay. So utilization levels have risen. You did around 84.5% in the previous quarter. You're saying that you're at around 87% at this point in time. Just wanted to understand, even when it comes to new businesses, share of new businesses, it currently, it stands at around 15%. How much do you expect it to rise? Which are the sunrise sectors for you?
So, what has really taken off well is the customer-to-customer business and the rail express business. These businesses have not been they've not been offered by other logistics companies, and we managed to create a new space altogether. And I think in the next 5 years, these businesses would definitely be about 25% of the overall top line.
Okay, 25% of the overall top line. And any kind of fresh capex that you plan to put on board for any further investments? What is the capex plan for the full year?
As it was mentioned, it was about 100 crores and about 100 crores for the buyback. So I think I do not see more than 85 crores happening this year.
All right. Final question then from my end. Chander, 18 to 20% is what you had guided for, with 17% margins in the second quarter at least. Do you think you can do better than that? That's point number one. And secondly, the 2,000 crore revenue target that you have for FY25 with 20% margins, do you think that may come sooner than anticipated?
So we are always, looking at okay. So as the management, I do not like to get top line at the cost of bottom line. I don't want to have a 35%, 40% growth and lose money on doing that business, which is typical of logistics companies in India, especially in India, because how the environment is very challenging. It's cost plus, and it can never be profit plus. So in that sense, I think I'd like to maintain top line growth to what we have committed. And as the economy improves, there is a very high possibility that we could also go up to, as per our plans of achieving 30% to 32% growth.
Okay, all right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. We need to take a short break, but up next, we'll be speaking to the Director Research at Incred Capital to discuss Lupin and what the way forward would be